Good evening, everyone. The internet is a little bit better now. I think I've been able to connect, so I will share the screen shortly. Today we'll be looking at chapter 3, right, which talks about the rule of professional conduct. Here we'll be concerned as to the how the basic fundamental principles, how it impacts on the work of the auditor or child or operational accountant or child accountant in the course of their business and professional relationships. Okay. Now, to start with, we need to have an introduction or overview of what we're talking about. Every profession has its own code of conduct. As we have it in medicine, law, we also have it in accounting. So every professional member or every chartered accountant is expected to abide by those ethical principles and guidelines, which are contained in the ICANN's Code of Conduct, which are contained in the ICANN Code of Conduct. Now, in looking at this code of conduct, right, we have we have two approaches that we need to look at it from. We need to look at it from two different approaches. First of all, we need to look at the body that regulates audit and assurance services globally. And that body is the International Federation of Accountants, IFAC. Now, this body has a subcommittee, which is known as the International Ethics Standard Board for Accountants. Now, this committee or this board of IESBA, they are still the responsibility of developing and approving new ethical guidelines for assurance providers globally, of which ICANN is a member. ICANN is a member of IFAC, so invariably also, they are also a member of IESBA. So that means they are binded or they are bound by the principles that are postulated or developed by the IESBA. Now, ICANN on its own also, they have their own fundamental principle, they have their own members' code of conduct, okay? Aside from the one that is being recognized internationally by the IESB. So we have the local, which is the ICANN members' code of conduct. Now, both the IESB and the ICANN members' code of conduct, they have what we call fundamental principles that every chartered accountant needs to imbibe. Every chartered accountant needs to imbibe. Why am I taking time to explain this bit? Now, we've seen over the course of years in ICANN exam, because this particular topic is always examined every diet. They can never get exhausted of testing this particular aspect. Why? Because every chartered accountant needs to understand, okay, and abide by these principles, because ignorance of the law is not an excuse. Okay, it's not an excuse. So sometimes in ICANN examination, they use this trick, okay, on students, and this affect the performance. So it makes students to fail sometimes, and that is why, to avoid these avoidable mistakes, hence I'm taking time to explain the difference between these two. The one by the IFAC, which is the ISB, and one that is by the ICANN itself. Now, the one that is by ICANN, right? There are 5 in number. The one that is by ISB also, as well, is also 5 in number. Now, if we look at the one from the ICANN perspective, right? You have independence, objectivity, integrity, you see, integrity, of conformity with technical standard, confidentiality, right? Now, this, right, we have here is what we have for ICANN. Now, the additional 2, okay, the additional 2, now let me explain now. For the ISBA, they have their own 5 also. The 5 for the ISBA, we have the integrity, objectivity, conformity with technical standard, right, confidentiality, and professional behavior. Why ICANN has its own. The one for ICANN we have here, we have independence, objectivity, integrity, conformity with technical standard, confidentiality. Then we have one again that is there, which is called the conflict of interest. We are going to look at that also. Now, in explaining these fundamental principles, right, all in all, there are 7 in number. But if you look at it from each point of view, both from ICANN and from the IASB, they are 5 each. So the one for ICANN, we have integrity, objectivity, what's it called? Confidentiality, right? Independence, and the last one will have been what we call the conflict of interest, right? Then we have the one for IASBA, which is the integrity, objectivity, confidentiality, conformity with technical standard, and professional behavior. So if you take everything together, there are 7. But if you take it individually, separately, we have 5 apiece, okay? And let's look at them one after the other. The principles that we have here, we have 5 here, right? We have the independence. We started with independence, which is the one that is issued by the ICANN itself. Now, independence is divided into 2. We have independence of mind and we have independence in appearance. When we talk about the independence of mind, what we are saying is that the state of mind that permits the provision of an opinion without being affected by influences that compromise professional judgment, allowing an individual to act with integrity and exercise objectivity and professional judgment. What he's saying in essence here is this. Now, we're talking about independence of mind. What we meant is that it should be a situation whereby a professional accountant, a child accountant, takes decision, okay, or expresses an opinion without being afraid, okay, or being influenced by the circumstances, okay, around or factors around him, or whether this situation of the other situation of things, events, or people around. So all of this should not influence his decision. He needs to take decision independently. That we mean by independence of mind. Why independence in appearance is described as the avoidance of facts and circumstances, right, that are so significant, a reasonable and informed third party, having knowledge of all relevant information, including any safeguard applied, would reasonably conclude a firm or member of the assurance team, integrity, objectivity, operational skepticism, and what compromise. What this one is saying here is that independence in appearance, that at a glance, a third party or the public can tell if the accountant independence has been compromised or not. That means even if you are saying with your mouth that, oh, I have independence or I exhibit independence in my professional work, if your attitude, if your approach shows that you are not independent, no matter, regardless of whatever you say, they will take you by your action and not by your words. So that's what we mean. So that means they expect you to always practice what you preach, or we always say walking the talk, walk the talk at all times. So that is what we have under that independence. Okay, now for independence, I can add some rules. One of the rules is that members are advised to discharge their duties with integrity and objectivity. That is, they should not allow their name to be associated with any document or financial statement that is misleading or biased. What it means here is that any document that you have not reviewed, you have not confirmed, right? You should not append your signature. If you have not reviewed and understand the content of a document, do not append your signature, because when you do, it rubbishes or it affects, okay, the reputation of such accountant and as well as the profession as a whole. All right. Then another rule of independence is that auditors should not hold beneficial interest in the equity of client company. Auditors should not have shares or stake in client company. That means they should not buy shares, like what we saw in the case of Aaron versus Otto Anderson in 2001, where Otto Anderson bought shares in Aaron Corporation, which was not supposed to be in the first instance. Another rule on independence is that it should not accept fees, the amount of which is dependent on the success of the engagement. What this one means is that you should not allow the audit fee to be hinged on contingency, that is, unless certain conditions are fulfilled. That is when the audit fee will be what? Will be settled or will be paid. For instance, sometimes the client will tell you that if you issue an audit report that is qualified, I will not pay your fee. The only time I'm going to pay your audit fee is when you give me a clean audit report. This is based on a condition or a contingency. If that arises, then that means the independence of such auditor has been compromised. Another one is that it should not act as an auditor where it's currently act as for the client in executive capacity. What it means here is that if you are taking up position as a management staff in a client organization, you are not expected to take up the position or the role of an external auditor as well. Why? Because it will lead to conflict of interest, and that will amount to impairing the independence of such professional accountants. Okay. Then another rule on independence is that you should not act for two opposing clients in the course of negotiation, settlement, or claims unless you have been duly appointed under the process of the law as an arbitrator. What that one means is that you should not try to make peace between two opposing clients or two clients that are fighting. Do not say you want to broker peace or you want to maintain peace or you want to resolve their conflict. Unless the only time you can do that is when a court of arbitration or a competent court has granted the status of an arbitrator before you can carry out such an assignment or responsibility. Okay. Now, another thing is that you must not give or receive from a client a loan or financial guarantee unless the client is acting in ordinary course of business and the terms are not duly unfavorable to the auditor. What that one means is that you should not give or receive from a client any form of what loan or financial guarantee. What that one means is that when the client, let's say you have a client that is a bank and you solicit for a loan and they say that, okay, we'll give you loan. The current market rate for a market interest rate or the current prevailing interest rate is 30%. Now, because you are auditor, I'm going to give it to you at 10%. If there is such concession, it might erode the auditor's independence. But if you are going to give it to you at the prevailing market rate, the current interest rate, then it will not affect your independence. That is what this is saying. Okay. Then another one that you must not act as an auditor for a company where you are acting as a receiver. Now, these are two rules that should not meet or should not clash. If you are the auditor of the company, that means that you are the one examining financial statements. Now, if you're a receiver, that means the company is going through the process of what liquidation is being dissolved. So you are the one receiving the asset that you are the one that's going to realize the asset now to offset the debt that is being owed by the company. So you are acting in the interest of the management in that instance. And also, if you're acting as an auditor in that same organization, what it means is that it will amount to conflict of interest, and that will impair the independence of the auditor. Then, the auditor should not derive too great a proportion of his annual recurrent fee from a client or group of connected clients. So result is regarded as substantial. What this one means is looking at the audit firm as a whole. Now, in an audit firm, you have several clients. Let's take an example. Assuming in an audit firm, you have 4 clients, right? And each of those clients, they contribute 2.5 million naira every year as the audit fee to the coffers of the audit firm. 2.5 million naira times 4 clients, that is 10 million naira. So that means that each of them, the percentage that they contribute to the annual fees of the firm is 25%. That is what they are saying. It is okay. But where you have an instance where you have one of them contribute above 25%, what that one means is that will create some sort of favoritism or preferential treatment to that particular client, because if there are issues, let's say all the 4 clients request for the service of the audit firm at a go, and one of them contributes above 25%, let's say 30%, it's obvious that the audit firm will pay more attention to the one that contributes 30%, okay, or more, than to the one that contributes 25% or less, because they know that that one is contributing more. It's going to affect the auditor's independence. Another one is that personal relationship, either by blood or by marriage, may also affect independence. Okay. Now, what that one means is that there should be caution, should be exercised at all times, right? when it comes to personal relationship or relationship by blood or by marriage, and also acceptance of gifts. Now, somebody will ask that why is acceptance of gift? Why is acceptance of gift? Why is it a problem? Why? How does that affect independence? Now, this is the position of ICANN as regards acceptance of gift or hospitality. Any gift or hospitality, right, that will not affect your sense of judgment can be accepted. I take it again. Gift is relative and it's subjective. Now, if you are going to receive or collect any gift and you know that such gift will not affect your sense of judgment, you can collect it. So the position of ICANN is that any gift that is of no amount or inconsequential amount can be accepted. Any gift that is of low amount or inconsequential value can be what? Can be accepted. So that means that it is left for the chartered accountant to be able to evaluate and assess the gift that he wants to collect, whether it will erode his independence or not. Okay, that is for one we just look at now, independence. The second one, we are looking at objectivity. Objectivity imposes an obligation. That's the second principle on chartered accountant to be fair, intellectually honest, and free of conflict of interest. What that one means is that at any time you are in a position to take a decision, you should always act with your emotions not involved. You must detach your emotions from any time you are taking a decision. You should not allow your emotions or your bias or your prejudice, right, to affect your sense of judgment. That is what it means. Okay? So you should always ensure that you are objective at all times. Now, how does this play out? Now, in selecting the situation and practices to be specifically dealt with in ethics requirements, okay, relating to objectivity, adequate consideration should be given to the following factors. Number one, chartered accountants are exposed to situations which involve possibility of pressures being exerted on them. This pressure may impair their objectivity. Sometimes you are working in an organization, they are acting illegally, but they said that you must be part of them, you must sign documents to show that you are part of them. That is when someone is your general accountant uh, is being pressurized or being put on pressure to do certain things. Okay, that's what we mean. Then relationship should be avoided, which allow prejudice, bias, or influences of others to override objectivity. So anywhere you are going to allow sentiments, get prejudice or bias, you should always avoid such a relationship. Okay, chartered accountant have an obligation to ensure that personnel engaged in professional services adhere to the principle of objectivity. All right. Now, child accountants should neither accept or offer gifts or entertainment which might reasonably be believed to have a significant or improper influence on the professional judgment of those whom they deal. What they are saying is talking about gifts. Any gift that is not modest, okay, you shouldn't collect it. As an accountant, it's subjective, right? And it's debatable. The third one is integrity. Integrity is a principle that imposes an obligation on chartered accountants to be straightforward, honest in all their business and professional relationships. That means they have to be truthful, all right? Instead of being truthful in all your business and professional dealings, okay? A chartered accountant should not be associated with reports, returns, or communications or other information where they believe that the information contains a materially false or misleading information. Okay? So that is integrity. You know that this thing is not right. You should not be party or should not be in support of such. Or any information that contains statements or information furnished recklessly. So if you don't know the source of certain information, you should not help to circulate such information. Sometimes there are communications that are regarded as hate speech or hate species. So you should avoid circulating or spreading such information, because at the end of the day, if they are going to be prosecution, they are going to prosecute everybody that circulated such information. Okay. Also, omit or obscure information required to be included where such omission or obscurity would be misleading. Okay? A member's advice or work must be uncorrupted by self-interest and not be unduly influenced by the interests of other parties. So what this one is saying here is that you should always act in truthfulness at all times and honest. So you should not allow a situation whereby someone's decision or opinion is having an influence on you as a child accountant. Okay, so that's what we mean by that. Then we have the next one: compliance with technical standard. This can also be seen as a professional standard, professional standard, right? And due care. Okay, that can also be, you can see it from that angle, and you can liken it to professional standard and due care. Now, all this means is that as a child accountant, right, you are expected to be up to date with information at all times, especially that relates to your profession and your clients and your industries where you find yourself. And ICANN has made it possible, right, by ensuring that they have faculties, okay, that they put in place to ensure that their members are always updated with information from time to time. For instance, once you become a chartered accountant, you'll be entitled to attend at least 2 mandatory continuing professional development at least twice in a year. All right. Then when you are done with that, in the course of your induction also, you'll be advised, okay, to belong to at least one faculty. There are 7 faculties in the institute. You're expected to belong to at least one of them. The essence of this is to ensure that we promote specialization among chartered accountants. Knowing fully well that accountancy, right, is very broad. Okay, is very, 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 very broad. Now, what they do is that these are the what's it called? The faculties. You have audit, investigation, and forensic accounting, taxation and fiscal policy, insolvency and corporate engineering, information technology and consultancy. All right, you have corporate finance management, public finance management. There are several. There's another one again that makes it 7. Okay, so the 7 of them, you're expected to belong to at least one. Okay, maximum of 3, minimum of 1. The maximum of was 3. Okay, so that is what we mean. That's how you maintain competence. And also, when you're talking about due care, we mean that at all times, right, you should ensure you exercise due care, skill, and diligence in all your professional work so that your work can stand the test of time, ensuring that you comply with all standards at all times. Then we have confidentiality, which is the 5th principle. The 5th principle is confidentiality. This principle imposes an obligation on chartered accountant to refrain from disclosing to persons outside the firm and on the need-to-know basis to persons within the firm or employing organization confidential information acquired as a result of professional and business relationship without proper and specific authority, unless there's a legal or professional right or duty to disclose such. What this one is saying is that chartered accountant, you should not divulge your client's privileged information, even to your colleagues, your family, and friends, unless you are being asked or being directed to give or to expose such information. Okay. Now, using confidential information acquired as a result of professional or business relationship to their personal advantage or the advantage of third party. What we are saying is that even when you have such information that are privileged information, you shouldn't use to your own advantage or other third party, other the advantage of the other third party. Now, another thing is that in a social environment, you should maintain confidentiality. For instance, when you're in a party where you are a group of auditors, you should not divulge your client information recklessly. Okay? Then, chartered accountant should be alert to the possibility of inadvertent disclosure, particularly in accountancy involving non-association with a business associate or a close or immediate family member. That all you are saying is that when you are too close to someone, when there is familiarity, there's every tendency that you might want to divulge or release certain information, okay, because of your closeness or long relationship or long association with that person. Then, child accountants should also maintain confidentiality of information disclosed by prospective clients or employer. That is, you should always you should not disclose information about your client or employer. All right. Now, aside from all of this, right, there are also circumstances where such client information can be what can be divulged. There are circumstances, right, where such client privilege information can be divulged. Number one, a law or authorized by the client or the employer, you can divulge it. Okay. Another time you can also divulge it if it's required by law. That is, if the court requests that such be provided or presented as an evidence in the court of law. Okay. Number three, if there's emotional duty or right to disclose, okay, when not prohibited by law. That is, for instance, if it's for the public interest or national interest, you might need to divulge. For instance, if somebody is into money laundering, you don't need to conspire with such person or to support such person because this is against national interest. You need to divulge such information and report to the regulatory authority as soon as possible. Okay. The third one is to protect the professional interests of the accountant in legal proceedings. So that's the next one. Sometimes you might be acting in the best interest of the profession just to ensure you put the profession first, okay, in all that you do. And the last one, to comply with technical standard and ethical requirement. Now, what we mean by that is that there are established guidelines that you need to comply with. And if it's one of the requirements that you must comply with those ethical requirements, you cannot refrain from such information. You might need to divulge it. Okay, so those are the main circumstances under which you can divulge your client information. All right. Now we have threats. What do we mean by threat? Threat is anything or circumstance that attempt to breach compliance with the fundamental ethical principles. Anything that prevents you from exhibiting those fundamental principles or practicing those fundamental principles is considered a threat. And there are 5 categories of threats. We have the self-interest threat, we have the self-review threat, we have the intimidation threat, we have the advocacy threat, and we have the familiarity or trust threat. So let's look at them one after the other. The first one is the self-interest threat. This is a threat to the auditor's objectivity, stemming from a financial or other self-interest. So anything that has to do with economic benefit to the auditor, okay, that it makes it impossible for the auditor to think straight is seen as what is self-interest threat. Examples: if the auditor has financial interest in a client or jointly holding a financial interest with a client, whether you have shares in the client business or you are co-founder or co-owner of the client business, it is a self-interest threat. Okay, undue dependence on total fee from a client and an undue large proportion will normally be 25% and above is inclusive of repetitive one-off assignment. That was the one I explained earlier. That is, if you are obtaining more than 25% from one particular client in your audit firm, it means that the audit firm is under the self-interest threat. Or having a close business relationship with a client is also seen as what a self-interest threat. Concerned about the possibility of losing a client, if you're always afraid that you are going to lose a particular client, that means whatever it tells you, you want to do it. What it means is that it's also an example of what a self-interest threat. Or having an employment with a client, being on the client's payroll, is also seen as what is self-interest threat. Contingency fees relating to an assurance engagement is also seen as a service. What do you mean by contingency fee? Contingency fee is what I said earlier, that is the result is dependent on the outcome of the report. If the report is favorable, it will be in your favor. If the report is not favorable, the audit fee will not be paid. Okay, so these are some of the main examples of self-interest rates. Do you have any question? I've not even answered the why. Are there questions? Any question? Any comment? Any observation? Are we there? Okay. Are we there? So we can continue. All right, thank you. Okay, so let's continue. So we look at the second trait, which is the self self review trait. Self review trait. Now, self review trait is a trait that emanates, okay, as a result of an already completed engagement being subjected to another round of reevaluation or a review. Okay, it emanates from an already completed engagement being subject to another round of what? Review or reevaluation. It is considered a self-review trait. Okay, example, discovery of a significant error during a re-evaluation of the work of the chartered accountant. That is a self-review trait. Number two, reporting the operation of financial system after being involved in the design of the system. Sorry. Sorry. In design of the system. Sorry. In design of the system. It's reporting on the operation of financial system after being involved in design of the system. That means you are part of people that developed or designed that system. And you're still part of the person that is now reporting fault, okay? Reporting faults that are found or the gaps that are found in the system, okay, during implementation. Then having prepared the original data used to generate records that are the subject matter of the engagement. That is, you are the one that prepared the trial balance, and you now also be the one to audit the financial statement that you have prepared, or prepare the financial statement with the trial balance. That is also seen as a self-review trait. Okay. Then we have other examples. We have other examples. Uh, a member of the assurance team being or having recently been a director or officer of that client. That is, you are once a part of the assurance team, the audit team that audited the company. They are not taking up executive capacity in the client business. So that can also be tagged as what a self uh, review trait. They have the advocacy trait. Advocacy trait has to do with where the auditor becomes an advocate or always acting in the best interest of the client position of the client in any adversarial proceeding. Okay, when the auditor is always acting in the client's best position or positive position in any adversarial proceeding or situation, you're always trying to defend the good cause of your client. For instance, your client uh, wants to get a loan from the bank. They say that you have to be there. Okay, before the loan can be granted, you say, okay, no problem, I will be there. When you are present at such meetings, it's seen as what? An advocacy trait. Okay, your client wants to raise capital from the stock market. He said that he wants to sell his shares. He said, don't worry, you can use my firm as an agent, or my firm will serve as an agent where I will help you to sell those shares. But if an audit firm does that, it is an advocacy trait. Okay. If he acts as an advocate on behalf of the client in any dispute, it is also an advocacy trait. Okay. Then we have the fourth one, which is the familiarity or trust. This is a trait that arose as a result of what? Close relationship with the assurance client. When you become too close to someone, you become sympathetic to the client interest. You always want to protect the client interest. Okay. There's a lot of long association. Examples: when a member of the assurance team having a close or immediate family relationship with the director or officer of the company. So when the audit firm, members of the audit firm or the audit engagement team having a close relationship with immediate family or director, all right, that could be seen as what familiarity or trust threat. Then when a member of an engagement team having a close or immediate family relationship with an employee of the client who is in a position to exert direct or significant influence over the subject matter of the engagement. For instance, when a member of the engagement team is very close, okay, to any member or any employee that has significant influence, somebody like a director or somebody that is that's very powerful, okay, that can take decision on behalf of the client. That's what we mean. If the audit firm, if the assurance team have close relationship with such person or personality, it can also be seen as a familiarity or trust threat. Okay. Then we look at the last one. The last one is the intimidation threat. Now, intimidation threat occurs when a member of the assurance team is being deterred from acting objectively and exercising professional skepticism by threat, actual or perceived, from directors, officer, or employees of an assurance client. What this means is this: when there is actual a perceived or actual threat. Where what that one means is that from the management staff or from the director, okay, they try to prevent the audit team from carrying out their required audit process or procedures. Okay, for instance, when an audit team is being threatened with what? With removal. That is, if it does not comply, it does not act, it does not cooperate with the management, it will be what? Dismissed. Okay. Or for instance, if it includes a qualified opinion in the audit report, his audit fees will not be paid. Or if it's not paid, it will be sued. Okay. Or when the audit team is being asked to reduce inappropriately the essence of work to be performed, okay, and their fee. For instance, supposed to do work that will last for like 8 weeks. The manager said that you can only be allowed to do for 2 weeks, and what you're supposed to collect or obtain as your audit fee is 10 million. So we can only pay you 5 million. When such arises, that can also be seen as an intimidation threat. Okay. So all of these are intimidation threats. Now, what are the safeguards? So what are safeguards? Now, safeguards are there are circumstances or factors that intend to eliminate or reduce threat to an acceptable level. Okay. There are factors, okay, that reduces or eliminates the threat to an acceptable level. So we have two of them. We have the safeguard created by the professional legislation or regulation. And we have the second one, safeguard within the work environment. For the first one, safeguard created by professional legislation or regulation. What we mean is that ICANN is the body that regulates audit practice in Nigeria, right? So they are the one that conduct training, okay? And they also ensure they add new member, they enlist new member. How do they enlist new member? Once you become chartered, you'll be inducted, you become a member, you become an ICANN member. Then another way they also do that is by continuing professional development. So what they do is that they keep training you in this mandatory continuing professional development to ensure that you are updated and you have upskilled your knowledge to uh, to a level where any client can impose some level of confidence on your work, on your competence, right? Then the next one, professional standard and monitoring disciplinary processes. What that one does is that because ICANN also they also discipline their members that don't act in line with established principles. Okay, they set up tribunal, disciplinary tribunal to try them, to hear them. Okay, when they hear them, they want to take decision whether to suspend or to fine or to delist them. All right. They also have external review of a firm's quality control by a legally empowered third party of reports, returns, communication, or information produced by child accountant. What that one means that ICANN is set up a professional practice monitoring committee that goes around the audit firm. Okay, it goes around the audit firm to ensure that all the audit firms they are acting in compliance with laid down rules by the institute. All right. Then we have the next one, safeguard within the work environment. What that one means is that the assurance clients management appoint the firm, persons other than management ratify or approve the appointment. What that one means is that sometimes when the auditor is being appointed, it's the same management that appoints also, that also ratify, that appoint the auditor. They also approve the auditor. Do you understand? Now, to avoid that, the safeguard is that when the management appoint the auditor, shareholders should be the one to ratify the appointment or to approve the appointment. Okay. Another safeguard is under this is that the assurance client has competent employees to take managerial decisions. Now, some audit firms, when they take up assurance engagement, audit engagement, they act on behalf of the client. That should not happen. Okay. The client should ensure they have competent staff that can take decisions on their behalf and not the auditor or audit firm taking decisions on their behalf. All right. There should also be internal procedures, okay, that ensure objective choices in commissioning or non-assurance engagement. So there should be policies that guides behavior or regulate behavior of members or staff within the organization. Sometimes when there is sexual harassment, when there are unresolved conflicts, okay, all of this, there should be policies put in place to explain how these issues are settled or resolved. All right. So that is what we have under that. Then the next one is that corporate governance structure also plays an important role in this safeguard. How does this play an important role? Now, when there is corporate governance, it explains the responsibilities of each key player in that organization. Corporate governance has to do with the way and manner in which a company is being controlled or directed. And there are three key players in corporate governance in an organization. We have the directors, we have the auditors, and we have the audit committee. Now, once you have enshrined corporate governance framework in your organization, the responsibilities of these three key players are defined, okay, and communicated to them. So there's nothing like oversight or somebody not acting the way they ought to act. Now, safeguard also relates to long-standing rules of professional conduct for members, of which this guidance form, of which these guidance form part. That is what we are saying is that where appropriate, there are rules impose specific prohibition where the threat to auditors' objectivity is so significant or is generally perceived to be so that no other appropriate safeguard will be effective. What we are saying here is that there should be professional conduct or policies in place that serves as guide to members at all times to ensure that they act in compliance with these established rules and regulations. Another part of safeguard is the ethical support provided by the institute, that is the investigating tribunal and disciplinary tribunal. So when there are issues where clients do not act in conformance with established law, such such member will be summoned, okay, will be interrogated and investigated. So the outcome of the investigation and interrogation is the outcome will be either you'll be penalized or suspended, will pay fine, or you'll be delisted. All right. Then the reinforcement given to the above safeguard by the policing system which react to complaints, whether by members of the public or members of the profession, investigate the background to the complaint, and when necessary, commences disciplinary proceedings against offending members. Okay, so what that one means is that most times when ICANN wants to accredit their members, they put the list out on social media, okay? That in case you know if any of our member has acted in an improper manner or inappropriate manner, kindly report. If that person is on this list, kindly report to the assigned number or email address provided. So such person will now be someone that said, you are so and so. There's somebody in the public or somebody out there reported that you are found to not to be able to do this, to do that. But kindly explain or justify your action. That is a process that they put in place as well. Okay. Then, when you talk about monitoring, right? Monitoring is a collective effort, okay? Which means that being a collective effort, right? The system ensures that firms' past conduct and current procedure are likely to come under close independent scrutiny. If the conduct of practicing members give rise to challenges over the exercise of these rules, okay? So what he's saying here is that the conduct of the firm, both past and present, they are always being monitored and reviewed. And this is being done by the Professional Practice Monitoring Committee that goes around all the audit firms across the nation to ensure that they are acting in compliance with established guidelines. Okay. Now, one of the ways they do that is the active monitoring procedures conducted by the profession constitute a form of a safeguard. On behalf of the institute, the Professional Practice Monitoring Committee may visit firms which conduct audit or examine compliance with audit guidelines and sound professional practice. Auditors should also use the above safeguard, that is professional legislation and regulation safeguard of the assurance client or the firm's own system and procedure to reduce threat. Okay. Now, certain safeguard may increase the likelihood of identifying and deterring unethical behavior. Such safeguards, which may be created by the accounting profession, regulation, or an employing organization, include but not restricted to this. What this one is saying here is that there are other safeguards, right, that can also be put in place or established or developed so as to ensure that there is no limitation to the safeguards that are available, both to the profession, legislation, or regulation. All right. So these are some of the safeguards here. Effective well-publicized complaint system operated by the employing organization, the profession, or regulation which enables colleagues, employers, and members of the public draw attention to unprofessional or unethical behavior. What this one is saying is that there should be like a whistleblowing report or arm in the organization where the shared accountant operates. Okay. Now, where he operates, there is need, okay, there is need for them to establish such mechanism or avenue where inappropriate conduct are reported. Okay, this could serve as checks and balances, okay, to the auditor and also to the profession, so that they are put in check at all times. Okay. Then another one is an explicitly stated duty to report breaches of ethical requirements. So also, ICANN should also have I think they have a number or an email where you can report members who have breached the ethical requirement, and such people will be invited, investigated, and where they are found guilty, they will be prosecuted. Okay. Now, the nature of safeguard to be applied may vary depending on the circumstances. Okay. In exercise of rational judgment, the accountant should consider what a reasonable and informed third party having knowledge of all relevant information, including the significance of the threat and the safeguard applied, will conclude to be unacceptable. So what this is saying here is that anytime child accountants are carrying out or performing their business and emotional relationship, they should always have at the back of their mind that the public is always watching what they do. So even if they say that they are independent or they are forthright in what they are doing, their actions sometimes might show them fault or might expose their ineptitude or their unruly behavior, and such will make the profession to be to have lost its reputation, and such is not acceptable. Okay, such is not acceptable by the institute. Now, to recap on what we've done since or so far, do we have any question before we do a recap, before we go to the next one? Any question? Any observation? Any comment? Any comment? Any observation? Any comment? Any observation? Are we good? Okay, now what we are seeing, let me just do a little recap before we continue, before we proceed. Now, we are looking at chapter 3 of the Advanced Credit and Assurance Study Text, and chapter 3 title is what? Rule of Professional Conduct. And here we said that there are principles or there are fundamental principles that child accountants need to observe or comply with. Now, these principles goes a long way or go a long way in helping child accountants to be able to exhibit or carry out their functions effectively and judiciously in all their business and professional relationships. Now, these principles we have here, we have 7, right? But what we have here, we have 5 here. Then we have additional 2. Additional 2 is professional behavior and conflict of interest. Now, the remaining ones are independence, objectivity, integrity, conformity with technical standard, and confidentiality. So all in all, there are 7. Now, why am I making reference to this? Now, I said that ICANN has their own fundamental principles. IFAC or ISBA, they have their own fundamental principles. Now, the fundamental principles of the ISBA, which is International Ethics Standard Board for Accountants, which is a committee of the International Federation of Accountants, IFAC. Those principles are integrity, objectivity, confidentiality, technical competence and due care, and the last one, professional behavior. While the one by the institute, ICANN, we have objectivity, integrity, confidentiality, independence, and conflict of interest. Okay. Now, all in all, we have 7. But if you are going to look at per the body, we have 5 apiece. Why am I taking time to explain this? I said that the ICANN exam, they've not exhausted this particular chapter. There's no doubt that they don't set questions on this particular chapter, and they make it clear that they are doing so because they want every member to have an understanding, in-depth understanding of the principles, threats, and the safeguards, right? So, what they have done is that they always test their students on this chapter all the time. Now, if they are silent as to the fundamental principles, give them the 7, which include integrity, objectivity, confidentiality, technical competence and due care, professional behavior, independence, and conflict of interest. But if they are particular, let's say they are talking about ISBA, you give them 5. which is integrity, objectivity, confidentiality, data competence and due care, and confidentiality. No, and professional behavior. That is five. I take it again. Objectivity, integrity, confidentiality, conformity with technical standard, and what? Professional behavior. If it's for ICANN, you talk about integrity, objectivity, um, confidentiality, conflict of interest, and independence. So those are the five that you have. Now, and I explain each of those five, right? What it means, each of these five. Now look at independence. What is divided into two? In appearance. It depends on your own as a chartered accountant without being influenced by circumstances, personalities, or events. Independence in appearance has to do with a state of mind where a knowledgeable third party could perceive your independence from the distance. It doesn't need to be close to you. From your attitude, from your action, you can deduce whether you are independent or not. So in appearance, they're able to deduce or detect that your independence, whether you're actually independent or your independence has been what eroded or impaired. Right? Then we went on to look at the objectivity. Objectivity, we explained that is a principle that imposes an obligation on child accountant to be fair, intellectually honest, and free of conflict of interest. That is that they are taking position, they should not allow prejudice, emotions to affect their sense of judgment. That's what we mean by objectivity. That's what we mean by objectivity. That also means that anytime you are exercising or you are conducting your assurance engagement or audit engagement, you should ensure that whatever opinion you arrive at the end of the engagement is an opinion that is devoid of sentiment, bias, and prejudice. All right. Then we go to the third one, which is integrity. So integrity has to do with is a principle that imposes an obligation on child accountant to be straightforward, honest in their professional and business relationship. They have to be truthful. What it means here is that any document that you have not reviewed, you cannot append your signature. And you should always be mindful of any information that you want to circulate. You should be sure that you have authenticated the source of such information. All right, you have authenticated the source of such information. Then you will go to the next one, which is the compliance with technical standard. That is, as a child accountant, you should always upscale your knowledge and skills, okay? So that to mirror the current happenings in your profession, in your field, okay? So that you can uh, provide answers or advice to your clients, okay? And this will boost their confidence in you or your firm as a whole. And it makes them also to it makes you to be reliable in terms of your capacity management. Okay. And one of the ways ICANN has been able to do this is ensuring that once you're a member, you must be a member of these faculties. Faculties are established by the institute in order to create a specialization, okay, in the accounting profession. Although if you the accounting profession is very broad and you cannot be a master of all, so there's need for them to specialize on certain areas. Okay. Now there are seven of them, but I think they have six here, but there are seven of them. So the six that we have here, those faculties range from audit and investigation, tax, okay, business engineering, information technology, and consultancy. Okay, we have corporate financial management, public finance management, okay, insolvency and corporate engineering. All of these, they are the faculties. So as members, you're supposed to belong to one, okay, subject to a maximum of three. Now, the next one is confidentiality. Now, confidentiality is that principle that explains that under circumstances should you divulge your client information unless you are asked to do so. This is the only principle that asks what? That has an exception. That is, there are circumstances where you might need to divulge your client's information. All right. So, what are those circumstances that you can divulge your client's information? Number one, number one, disclosure is permitted by law and is authorized by the client or the employer. If the client says that you should divulge the information, yes, you can divulge it. That's one. Number two, if disclosure is required by law, that is, if the law says that you must divulge the client's information, for instance, if you should serve as a witness or you want to provide evidence in the court of law, that instance you need to divulge the information. Okay. Then where the appropriate or when the appropriate public authorities request that you divulge the information, like the police, EFCC, and the like, you might need to divulge such information. The third instance is if it is a professional duty or right to disclose when to prohibit by law, okay? That is to comply with the quality review of a member body, professional body. What that means or what that implies is that as a professional body, okay, they're always on the lookout to ensuring that their members are acting in the way that they expected to act, in the required way they expected to act. That's the essence of having a quality control review. Okay? Quality control review. Another way, still under that, if there's a professional duty or right to disclose, is to respond to an inquiry or investigation by a member body or a regulatory body. Sometimes other regulatory body, like the police or other professional body, might write the institute that they need to investigate one of their members and the likes, and that will be done. Okay. The other circumstance or circumstances included to protect the professional interest of chartered accountants in legal proceedings. What that means is that the professional interest, that is, others accountants should you bring the institute into disrepute. Okay. That means you should always represent the interest of the institute at all times. Then the last one is to comply with technical standard and ethical requirements. That is, you must ensure you comply with technical standard and what technical requirements or ethical requirements. Okay. Now, in deciding whether to disclose or not to disclose, right? Chartered accountants should consider the following: whether it is in the interest of all parties, including third parties. Okay, you might need to look at that, whether it's in the interest of third party or other parties. I'll read there. Number two, whether all the relevant information is known and substantiated to the extent that it is practicable. When the situation involves unsubstantiated facts, incomplete information, or unsubstantiated conclusion, rendered judgment will be used in determining the type of disclosures to be made, if any. Okay? So what we are saying here is that before you disclose any information, you should be able to confirm, okay, the be able to confirm the authenticity of the information. Okay, you need to confirm the authenticity of the information, okay, that you want to divulge. Because if you shouldn't furnish information that are not confirmed, okay, or that are not substantiated. All right. The next one is that the type of communication that is expected or to whom it is addressed. In particular, shared accountant should certify that the parties to whom the communication is addressed are appropriate recipients. So they must ensure that they send that information to the right audience, okay, or the right recipient, so that the information will be valuable. The information will be what? Will be valuable, okay? Internet is acting erratically. The internet is acting up again. The internet is acting up again. Just stay on the line. I hope the line will. Okay. So we are looking at threats. So what are threats? We have looked at threats earlier. I said there are anything or circumstances that attempt to breach compliance with the fundamental ethical principles. Okay. So there are five of them. We have the self-interest threat, self-review threat, advocacy threat, familiarity or trust threat, and intimidation threat. Okay, those are the five that we have. So if we look at them one after the other, now, now we have explained that before, right? So let's just do a summary of what I've said about that. The self-interest has to do with uh, the one that affects auditors' objectivity as a result of is financial interest or economic benefit to be derived from particular engagement, okay, or any other self-interest. So, for instance, if the auditor or the other accountant is nursing the fear of losing a client, if it's nursing a fear of losing a client, all right, such can be termed as what? A self-interest threat. Okay. If it takes up employment in the client business, can also be seen as a self-interest threat. Okay. If we have shares or stake in a client business, it also be seen as a self-interest threat. Okay. If any of these clients contribute about 25% to his gross uh, annual turnover, audit fee turnover in his firm, can also be seen as a self-interest threat. Now, the second threat is the self-review threat. And this is a threat that emanates as a result of the fact that an already completed engagement is being subjected to another round of review. Is being subjected to another round of review. Okay? If such arises, right, then you are talking about a self review a self-review threat. Okay, talking about a self-review threat. Now, what are some of the instances of self-review threat? Now, an already completed engagement is being subject to another round of review. It's a form of a self-review threat. You already completed that engagement. You already looked at the report. Somebody now found error in that report because they had to do it all over again. So it's a self-review threat. Now, reporting on the operation of financial system after being involved in the design or implementation. You are part of the team that recommended and you're part of the team that implemented. That should not be. That is a self-interest threat. Or you are part of the team that collated the original data. You are the one that prepared the data balance as the auditor. You also asked to prepare the financial statement and audit the financial statement. That will be seen as what self-interest threat as well. I mean, self-review threat as well. Okay. A member of the assurance team being or having recently been a director or officer of that client. Okay, client office. So for what we mean is a member, a part of the engagement team takes up an employment in the client business. Where such arises, right? You're looking at what? A self-review threat, because that means that it will be at the other side. And when his assurance team, his audit firm, when they come, they might not be free because it will be at the other side of the divide. And sometimes some questions they're supposed to ask, they're not able to ask because they know the answer. He knows the answer that they will get because he was already part of that team. He knows all their tricks, all their processes, and he knows it. So he always try to save or protect the interest of the his client in this regard. Okay. Now, other one, a member of the assurance team being or having recently been employed by the client in a position to exert direct or significant influence over the survey matter of the agreement. So that is also related to what I said earlier. All right, what I explained earlier. They're performing a service for a client that directly affects the subject matter of the assurance agreement. For instance, you are asked to carry out audit audit, okay, of the financial statement. You also now be asked to do carry out bookkeeping, okay, services, accounting services, or to help in the what in taxation services, or tax advisory service, or recruitment services. In advanced countries, especially in US, that is not allowed. But in Nigeria, we always allow it because we say that provided they are using two separate teams to carry out or execute such engagement, there is no issue with that in Nigeria. Then we have the advocacy threat. The advocacy threat is a threat that emanates from a position where the client, when the auditor or head accountant is seen to always projecting the good interest or the positive position of his client in any adversarial proceedings. What do we mean? Now, you're always looking for the trying to protect or trying to project your client's image at all times. For instance, your client wants to obtain a loan from the bank, and the bank says before the loan can be approved, your external auditors must be present. So you now went and attend such meeting. When the auditor attends such meeting, it is seen as what? An advocacy threat. Okay? Or another instance, the client wants to raise capital from the stock exchange and need to sell shares. And you know that, don't worry, I will help you to sell the shares. You're now serving as the as an agent, okay, for shares purchase for the client on behalf of the client. If such arises, also seen as what? An advocacy threat. Okay? Then we have the fourth, which is familiarity or trust. This is a trait that emanates as a result of long association with the client. So you become empathetic to their situation or to their interest. So what that one says that familiarity breeds contempt. Okay, when you're too close to a client, there's a possibility that you will always not be able to act objectively sometimes because of your close association or involvement in the client's business or relationship. They have the feature, which is intimidation. This is a threat that arises as a result of the audit firm or assurance team not being prevented from carrying out their assigned required audit procedures and processes. Okay, audit procedures and processes. That will be my intimidation threat as a result of actual or perceived threat. So what it means is that when a client, okay, when a client um, is pressurizing the uh, assurance team to reduce inappropriately the extent of work to be performed in order to reduce their fee. So the client tells the auditor, what we want to do is too much. I don't have that time. You're supposed to spend 8 weeks. I can only grant you 3 weeks. How much is the audit fee? 10 million naira. I can only pay you 5 million naira. So when such happens, that can be seen as a perceived threat. Okay. Being threatened with dismissal or replacement in relation to a client engagement is also seen as what? And intimidation threats. Okay, being threatened with litigation, saying that if you give me a qualified audit report, I'm going to sue you and I will not pay your audit fees, is seen as what? Uh, intimidation threat. Okay. Then we have the safeguards, right? Now the safeguards are measures put in place to reduce the threat to an acceptable level. And we have two of them, right? We have safeguards created by the profession, legislation, or regulation. They have the second one, safeguard within the work environment. The one by the regulated by the profession, legislation, and regulation are the ones that can likely to be the ones that are developed by the Institute of Chartered Accountants itself, because they are not that regulate audit and assurance practices in Nigeria. Okay, so they are the ones. What? How do they do that? They train. Okay, they educate. Okay, and they admit new members. Okay, so what they do is that they're not that administer the exam, qualifying exam, professional qualifying examination. They're the one that will mark it, right? Once the student pass or excels, they are going to enlist those students to become members. Okay, that's what they mean. They also engage in continuing professional development requirements. That means they always train them to ensure that they are always up to date with information that relates to the profession. Okay, that relates to the profession. The third one is professional standard monitoring and disciplinary processes. It's also being done by ICANN. Okay, they discipline their area members or members that are not complying with established laws and regulations. Okay, established laws and regulations. Some of them they will be tried. Okay, they will be interviewed, investigated, and if they are found wanting, appropriate penalties will be meted out to them. Okay. Sometimes also under this safeguard by the professional regulation or regulation, we also have external review. Okay, that's been done now to ensure that the quality control review is done uh, in a way that conforms with ICANN established processes and procedures. Okay. Then we have the corporate governance regulation also that explains that every corporate governance is about ensuring that business is being controlled and directed in a specified manner, right? And that implies that the key players in the corporate governance, the auditor, the director, and the audit committee, they all know their assigned responsibilities and rules. Okay, all their assigned responsibilities and rules. So that itself is a way. All right. Then we have the safeguard within the work environment. What this entails is that uh, this has to do with the work environment. Okay. Now, what it means here is that when the assurance client management appoint the firm persons other than management ratify or approve the appointment. What we are saying here is that it has to do with the organization itself. And when an auditor is being appointed, it's always appointed by the director. The director should not be the one that will approve the appointment. Shareholders should be the one to do that. That is ensure there is separation of duty, and there's no abuse of power of office. And the assurance client has competent employees to take managerial decisions. They should ensure that the organization they employ competent hands. Not saying that they not to employ staff that are incompetent, and at the end of the day, it's the audit firm that will prepare financial statements, audit financial statement that they prepare. Okay. Now there should be internal processes that addresses how certain issues are resolved. For instance, when there are sexual harassment, when there are conflicts, unresolved conflicts, there should be policy within the organization that provides steps, the necessary steps on how these are resolved. Okay, those are the safeguards. Safeguard also entails, like I said, a long-standing operational conduct for members, of which these guidance form part where appropriate. This will impose specific prohibition where the threat to the auditor's objectivity is so significant, okay, or generally as perceived to be so. What we are saying is that there should be established non-time policies and procedure that ensures that any threat to auditor's work is properly investigated, okay, and appropriate actions are taken. The next one is ethical support provided by the institute. That is, sometimes the investigating panel or the disciplinary tribunal, they are the one that act in this capacity to ensure that there is ethical compliance, okay, among its members. All right. So we look at all of this earlier. Now let's look to the last one. Does anybody have any question? Any question, any comment, any observation? Now, there are no questions or observations. Let's go to the last part, which is the corporate financial advice. What this entails is this, that assurance firms, okay, should not promote, deal in, or underwrite an assurance client shares. What we are saying here is this: it's a criminal offense where an auditor who audit the financial statements, right, gives corporate financial advice to his clients, and such advice resulted in the loss of investment or funds. Where it arises, it is always seen as a criminal offense, because anytime the auditor or general accountant is giving such advice, it should always emphasize that the client should always seek second opinion from other bodies or other persons so that they can corroborate or confirm if that initial decision or position presented is valid or not. Okay, whether it's valid or not. Okay, then it also means that the assurance firms, that is audit firm, should not promote, deal in, or underwrite an assurance client share. They should not help the client to sell their shares. Okay. In other cases, they should not commit an assurance client to the terms of transaction and complete transaction on an assurance client's behalf. That is, other circumstances should the assurance firm takes full or take decision on behalf of the client. It shouldn't happen. The work of the assurance firm is to examine the financial statement, whether it's prepared in line with applicable financial regulatory framework. It is not in its capacity to take or give advice, okay, or recommend or give advice to the client, okay. The client should be able to take decision on their. It should not take decision on behalf of the client. That we are saying. Okay, in other cases, safeguard safeguard such as not making management decisions and using individuals who are not members of the assurance team should be considered. That's what I just explained, okay? They should advising clients involved in takeover bids or shares. That is, they should not be found in a situation whereby they are advising clients in what in takeover bids or shares issue. That should also not be, because it's tantamount to a corporate financial advice. Okay, it's tantamount to a corporate financial advice. Now, auditors are often asked to give advice. However, when clients are involved in a contested takeover bid, they also should find themselves in a position where they are potentially acting for both parties. Now, what we are saying is, if it's an issue of takeover, there's acquisition or a merger, it's expected that the auditor should advise both parties. If he decide to take side with either of them, it will be seen to have committed what we mean by corporate financial advice, because that means he's trying to protect one's interest against the other, and that should not be. But where he acts as uh, okay, an objective in their dealings. Okay. Uh, then in this situation, all advice in the best interest of both parties. That is, it should ensure that it doesn't result in what uh, perceived independence. Okay, or independence in appearance. You shouldn't have that kind of situation. Then a firm may be in the possession of confidential information relating to each party, with a risk that the information may inadvertently become available to the other party. As if there should not be a situation whereby the auditor or general accountant is in possession of information for the other clients, okay, who are in competition with themselves, because there will be fear that the information can be leaked or released to the other party without taking permission. Okay, that should not arise also. If that arises, it's a breach of confidentiality, because there should be a document known as the ND, non-disclosure agreement, that says that under circumstances as the auditor will I divulge my client's information to other party unless certain reasons are applicable. Okay. The guidelines for this are as follows. There is no reason in principle why firms should not act for both parties when a contested takeover bid occurs. However, a firm should not be the sole or main advisor to both parties. It's what I said, that is, it should ensure that they seek second opinion. Okay. Next, if the accountant are in possession of material confidential information, and feel that their position in this respect is questionable, they should take advice from the appropriate financial regulatory authority. For example, Nigerian Stock Exchange involved in the takeover, or the national regulator of the financial market. What we're saying here is that where there are material information and the auditor or the audit firm does not, or the accountant does not know what step to take, it can liaise with the appropriate financial regulatory authority on how that information can be handled, so it will not be seen as taking advantage of a privileged information. Now, similar conflict of interest may arise in connection with issues of shares to the public, because the accountant may be advising both the company issuing the shares and potential investors, okay, such as companies interested in buying an investment in the shares or investment institutions. So what we are saying here is that uh, when it involves sale of shares or issue of shares, okay, care must be taken in such a way that the accountant may be acting for both companies issuing the shares or the investors. All right. So care must be taken to ensure that the accountant is not seen as protecting the interest of one party against the other party. All right. So in summary, what you need to understand with corporate financial advice is this. It entails that child accountants, when they are engaged as auditors, they should not find themselves in a position where they are giving corporate financial advice to their clients. And when the need arises, right, They should also tell the client to seek second opinion. You should not rely solely on that information, because that information or that advice or that information that is given in the first instance may come out of what? May be seen to be out of what? Out of sentiment. The audit firm might not be objective when, or might not be rational when they are taking such decision. So when they confirm or when they cooperate with other firms or other bodies, they will know. So if there are issues, they will not put it on the child accountant or the auditor, that they are the one that give or that supply of warning information that they acted upon. Okay, so this is the end of the class. That's for chapter 3. We have done chapter 3. The last time we met, we looked at chapter 2. Okay, regulatory environment and professional responsibility and liability. Okay, so the next class we'll be meeting, right? We'll see how we can look at questions, okay, on these topics that we have covered so far, so that because the essence of this class is to ensure that we're able to tackle questions come exams that comes up in May. Okay, we're able to know how to tackle questions. So I'll get some questions relating to what we have discussed so far. Okay, and we try to look at